Hi, and back with a new video, this time about, well, the recent correction in EV stocks, Chinese stocks, and the reasons for it. We've been discussing those reasons back and forth in our Patreon community here with lots of brilliant comments, and well, as I've been outlining before, I have been making 2 videos already about the topic of delisting of Chinese stocks. So if you haven't seen them, please go back to those 2 videos because everything I say in those videos is actually still relevant. And the only thing that changed up till to date is actually that today the House is actually going to vote on this. So this Holding Foreign Companies Accountable Act by Kennedy is actually going to the House and later on can actually become a law. And back then already in October I said that this is likely to pass because also, as we can now see in the news, I think it doesn't matter if it's Biden or Trump, the US is probably not going to change its position towards China for the near-term future. So, well, yeah, I think it's going to pass, and I'm still kind of relaxed about it because I do think that in the end those parties will get together and they find a solution of how those companies can actually become compliant. So for instance, NIO is audited by PwC in China, so that's the Chinese entity. So that in fact would mean that they would actually get those reports to the US auditors as well. And I think NIO itself wouldn't have a problem with that. And at the same time, on top of that, they also would need to clarify whether or not they have a government ownership or a stake in NIO, which is kind of already known in the fact that the local government has parts of a funding activity in NIO China, and the NIO ADR is actually holding a part of that in China. So I think there is ways for NIO to get transparent, and once again, the final route would be for NIO to actually go and delist and actually trade either OTC or go to the Hong Kong Stock Exchange where they just can continue trading. And well, that may have implications on the share price in terms of how much volume is there, the liquidity of the stock and so on for a short term. And it also may depress the stock because of all of the talk around it, like we will have it possibly today and tomorrow and actually already in the past couple of days. But in the end, if you own a share, a piece of the company, this is your ownership in that company. So for me, coming back to what has caused this recent correction in EV stocks, I think this is not the responsible part for it. When I'm able to do 2 videos on the delisting stocks, that means that also all of the other investors have this knowledge out there already. So this is a known fact and it should be mostly be priced in. And I also want to back it up with a little bit more data of why I think that this sell-off is largely actually profit taking, because the EV sector has been running up nicely and we see a little bit of a correction in the market currently. This is due to many reasons: new all-time highs, a little bit of end of the year profit taking and so on. And where do you take profits? Obviously with the stocks that are running up the most. And it was not only the EV sector yesterday that was tanking, it was also more of the other more volatile stocks that have been really deep in the red. So how I do like to think in such kind of corrections is actually that I ask myself the question, is my fundamental thesis about this investment in this company, did it just went bust or is it still intact? Has NIO, for instance, lost its value proposition towards the end users in China? Has NIO suddenly lost their competitive advantage? Is the EV market going to implode? All of those factors I'm trying to reassess, and so far I do think there is no fundamental changes to my investment thesis in NIO so far. And also want to now back it up with actually the latest delivery data and also look a little bit deeper on what could actually really hurt NIO, or what are the things that I'm currently watching. Because just the fact that yesterday XPeng, NIO and Li Auto reported their deliveries and they were just tanking likewise tells me the fact that actually the market hasn't really reflected what was happening yesterday, because this could actually be really good news for some of the XPeng investors out there. I'm personally not one of them. However, I've been previously saying that XPeng may run into trouble here with scaling their production. For instance, their Q4 guidance was quite weak with only 10K deliveries planned. And so I thought, well, it seems like they need a little bit more time to ramp up the production here. In the earnings call, they were actually talking about some battery supply issues there, But yesterday they reported more than 4,200 vehicles that they are actually delivered, and this is massively beyond my personal expectations. I thought they would be below 4,000 vehicles, more in line with the actual guidance. So I think XPeng is actually setting up here for a beat on the Q4 earnings. And then in contrary, if we look at NIO, which reported almost 5,300 vehicles, which is a nice year-over-year increase of more than 109%. It's a really nice scaling here too. However, on the other hand, NIO has been guiding for 16,500 to 17,000 cars in Q4. And now this will be a really big stretch to meet in December, because they would need to deliver more than 6,200 cars. So lots of people out there have actually imagined that NIO would deliver more already in November. And this should have reflected actually in the share price by NIO being down more than XPeng, which wasn't the case. So once again, I think this is an argument why I think yesterday or the last couple of days, what we've seen in the stock is mostly profit taking and some more of those macro events that are really larger than what we can see here on the small scale. So now this is something really crucial to watch here. If NIO cannot meet their guidance for Q4, I think this will actually have bad implications on the share price, because this will cause the bank analysts to revise their actually the guidance and the target prices. So we now had Goldman Sachs upgrades as well, and you know, lots of those analysts have price targets above $50 a share. But this is obviously pricing NIO at a pace that they can grow and continue to grow, that they actually would need in order to, fulfill those kind of price targets as well. And so in case that we see that NIO is not actually meeting them, then surely this will have also a correction in the price target. So this is really the essential thing to watch as a NIO investor here. So now the $1 million question for me is actually, will NIO be able to, meet their guidance? And at the same time, why XPeng is certainly delivering so much? So maybe XPeng already knew about that they gonna meet the guidance, and they just played it low here in order to exceed it and crush earnings. But on the other hand, maybe they already saw in November that they possibly have those production constraints actually going forward, and this possibly will only manifest in the next couple of months. So it was actually kind of a weaker outlook based on that. And at the same time for NIO, I mean, they're not stupid and they're not issuing those high growth outlook here if they're not confident that they can actually meet it. So what I think is actually happening here is that the double shift that NIO is talking about, which will actually increase the production capacity enormously, according to the NIO president, was actually happening in November. But we don't really know when in November. And also for the November deliveries, it is quite likely that most of the production for that has actually happened already in October, when they were still, with the initial 5,000 cars capacities. So it's possibly quite normal that we don't see the implications of the double shift ramping up, which is targeted to exceed or reach 7,500 cars by January. That this has not reflected yet in the November delivery. So we may actually see a large jump, and exactly this large jump that we need in December in order for them to have good Q4 earnings that are meeting the investors' expectations. So I guess some investors may be really nervous about it, because we will probably only in January find out about the deliveries of December, and then we already have NIO Day and also the quarterly earnings quite fast. So this is for me the most important thing to watch, because in case they miss it, it will have implications on the share price for sure. But once again, this is also a quite tiny piece in this long-term story growth. So if you are in for NIO for the long time, so sometimes 1,000 cars here or there, and also a couple of US dollars up or down, that doesn't really make a big difference in the long run. If you think that NIO can actually achieve the big vision that they have, and that is outlined by investors, for instance, like Bailey and Gifford, and also the expectations that are outlined by some of those bank analysts now, like with Deutsche Bank or Goldman Sachs. And to close this up, one of the most interesting tweets here is actually coming from Sam Corus, an analyst with ARK Invest, which we know they're not invested in NIO yet and seemingly not bullish on NIO. However, you can see how they are comparing Tesla, NIO, and XPeng. And this tweet initially, when it was not updated on what NIO is doing this year, was also the reason why I reached out to Sam previously. And now it's updated with the recent production numbers, and you can see that NIO is really doing quite well here in terms of scaling up their production. And as soon as we see something like a 7,000 run rate early next year, this will actually mean that they can meet those 80,000 to 90,000 deliveries next year, which is my personal target. And then if you look at here for the year 4, that would actually be also a nice ramp up compared to what Tesla has been doing back then, where they were a young company. And this is obviously the advantage of NIO outsourcing production, which of course is one of those big discussion points. But once again, I'm a fan of this concept because it shows, like here you can see, that it can scale quicker, and at the same time NIO still has some healthy margins. And for instance, in comparison to XPeng basically needs to produce 2 vehicles for 1 vehicle for NIO that they can make the same amount of money after the vehicle margin, because NIO has just a higher average sales price and also a really healthy vehicle margin already, whereas XPeng has low margins and also a lower sales price. So despite XPeng here catching up nicely and possibly exceeding NIO at the production at some point in time, that doesn't mean that I'm getting worried about my investment in NIO or that I think I need to jump the ship and go to XPeng. In fact, I think if XPeng is growing quicker, that is actually good for NIO, because NIO is actually collaborating with them on the charging network, so NIO makes some money on each of the XPeng cars on the road. However, I'm really surprised to see it, because I was thinking that the Tesla price cut would have more implications on XPeng, but I guess we need to see the December deliveries for both XPeng as well as for NIO to have a final conclusion on this. And this, my friends, is the only thing that I'm watching from the fundamental side. I think all the other things about the delisting and profit taking and shares expiries and so on, all of this is only noise. Yes, they may lead to some pushbacks, and these are maybe hard to swallow in some points. I mean, I've been going through them also with my Tesla investments, but in the end, keep it for the long run. That's what I'm personally doing. But of course, if you're feeling stressed out, you of course need to manage your own personal risk. And it's not everybody's darling to be part of such a roller coaster ride with a volatile stock like NIO is. Alright, that's it for now. Thank you guys for watching and see you in the next one.